Hello, it's Sunday, April 29th, and we're taking a look at Apple, which reports earnings after the bell on Tuesday, May 1st. And we're just going to take a quick look here today, maybe take a look at some of the activity and the options, and we'll take a look again tomorrow after the close at a little more of an in-depth view. Right now, the thing that I'm seeing most prevalent here is this 200-day simple moving average and the fact that closed all 5 days last week below that, and most importantly, the weekly chart now has put in a close below the 200-day simple moving average. We do have an uptrend that extends from the January 2017 gap up after earnings all the way through to the dip it took on February earnings of this year. Their earnings cycle shifted from January to February this year. They used to report in January. So now here they are reporting in May instead of April like they used to. But in any case, if you want to draw this trend line for yourself, it goes back that far. And starting tomorrow, it's going to start coming in around 159 to 160. That corresponds well with our 80 handle rule that I posted about in the blog this morning, kind of explaining the background of the 80 handle rule. So if we're going to maybe push down further tomorrow, let's look for this trend line to hold and bounce off of that maybe and hold a close above 160. Continue following through with that. If we're going to move up tomorrow, let's look for a takeout or continued resistance at the 200-day. Going right down the middle of the road here, and another level that we saw the last 4 closes in a row fall underneath was this original March low, or the March low, I should say, at 164.47. So that's another point that you can put in there. So 159 to 160, 166 handle is your 200-day, and we know 164 to 165 is this obvious closing price that they're trying to press and keep it below. Looking up above here, some of the things that have been fueling this from a technical standpoint, not so much from a technical standpoint as from the fact of pricing. We've had the 10-day simple moving average cross down through the 50-day. That means the average closing price of the last 2 weeks, which should always be up above and up above all the others in a momentum, in terms of momentum, has now dipped down and crossed and closed down below the average closing price of the last 50 sessions, or about a quarter. Well, then it went ahead and it made this bearish cross as well late last week. Pretty much probably what helped fuel Friday's weakness, a 10-day crossing down through the 20-day. So the 2-week average price has now crossed back down below the 4-week average closing price. So a couple of very bearish things, but with both of these things happening at the end of a very long down cycle, sometimes we get a strong rally to come in and try to fend this stuff off. Now, I don't know if that'll be tomorrow, but I can certainly see some sort of magical turnaround that happens for Apple on Tuesday, and that Apple rallies back up during the day on Tuesday. So if that's the case and you want to buy calls, maybe something towards the end of the day, if you're seeing this 159 to 160 holding steady, I would say you probably want to stay out of the calls if it drops down below this, because we could be looking for a move all the way down to 156 and filling this February gap if that were the case. But if it's holding 160 and you're looking at some calls, here are the options so far for next Friday's expiration. I like to look in here and see if there's any pricing anomalies. Price really drops off here at this separation in price, but this right in here, this 170 to 172.50, there's a nice little price drop in here, and they drop down from $1 all the way to the 60-cent handle at this point in here. So that might be that might be a nice place to play, because if Apple is going to prove everybody wrong and actually do well after its earnings report, it's going to break up above 166 and this 200-day simple moving average, and it's going to go after this set of SMAs up here, the 10 and the 20, which are at 170, and ultimately up to the 50-day simple moving average all the way up at 172. Okay, so that would be your most bullish setup there with the options, I think, and not that big of a commitment considering that it's going into earnings. Now, if you're looking for some kind of a liquidation play on Apple, like I just explained, we do have this 156 level here that is an unfilled gap down to the February 9th market-wide low. This halfway back point of the summer 2017 range. The actual February and 2018 low is at the 150 handle, and then just like I explained in the blog this morning, when we break 160, we're looking for 150. So obviously, that would be your bearish side play. Let's take a look at what's happening with the 150 options over here. Looking pretty reasonable. On the put side, I always try to go as high as I can, as my budget allows, just because they love to dip down and snap things back on the put side. With the calls, I usually am willing to go a little further out of the money, but I'm not usually willing to go as far out of the money on anything on puts as I am on calls. That's just me, but you do your own thing. If you like that 150 scenario and you really think Apple's going to completely roll over, it's only going to cost you 50 cents right now to play these puts. Let's take a look at the open interest real quick. The open interest is pretty high. Volume in open interest is highest at that 150 level. But you can see there was a lot of volume that came into the 160 and the 157 50s on Friday. There's a lot of volume and activity there. And over on the call side, your heaviest volume and activity is in the 170s. So I think we have it right there, looking between 150 and 170 on your 170 on your calls, 150 on your puts. And hopefully this information helps you out if you're deciding whether to work into a trade tomorrow and picking up some stuff ahead of whatever activity is going to happen on Tuesday. Because like I said, I think, common sense kind of, or I don't know whether it's common sense or just my gut telling me that Apple's probably going to have, a more bullish than a bearish day on Tuesday as it heads into the report. It's been selling off for quite a while here. People are going to want to cover their bets and just wait for the news. And I'm not saying it's going to have a huge rally on Tuesday, but comparatively to where it's been hanging out right now, I think it's going to be up a little. So maybe on the call side, you want to, if you're leaning bullish for earnings and you want to pick up calls, maybe you're looking at those tomorrow. Into what might be the lows tomorrow. If you see Friday's low break and you want to try and play buying calls off of this trend line, you might want to do that tomorrow. And as far as puts go, maybe you want to wait for those until Tuesday and see if it takes out and moves above this 200-day simple moving average for a close before earnings. You might get a better deal on your puts waiting until Tuesday. So calls Monday, puts Tuesday, see how that works. Or just be like me and just wait until earnings are over and play what actually happens after the fact. That's it. Good luck and good trading.